You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome to the show, Tim.
Jim, thanks for having me.
Well, we were worried about the markets taking a downturn before the fall. What's happening there?
Well, Jim, the markets, all the DNA markers are not in place. All the I's are not dotted and the T's aren't crossed just yet. But I will say this, the market's in trouble. It's not good. And, if you look back at I don't know if you wanted to digress back on this, the interviews run together and you forget what you said when, but, I've said all along, just to kind of reiterate maybe for new listeners that, we've been operating within the context of a bear market. That's hard to imagine, knowing and seeing that we're at a new high, or virtually at a new high. But, I think, the new high was made in March, in May. And, the price action in June, and particularly looking at some of the other averages is starting to get kind of ugly, looking at structure. But anyway, going back, it's hard for people to I guess grasp the concept that we could be in a secular bear market with price virtually at a new high. And yet that's the case. And in trying to explain that just a little bit, the market peaked out, and the economy peaked out in 2000. And we've talked about this before, but I want to talk about it again. If you go back and look at some of the things that occurred in conjunction with that stock market top, we had the velocity of money that peaked in 97, and we had the job participation rate that peaked in 2000. And so they kind of, for all intents and purposes, I guess the velocity of money led just a little bit. And you had a non-confirmation, if you will, with the 2000 top, and then you had the job participation rate rolled over. And, they're reporting now that this is the lowest unemployment level in the U.S. since, in the last 7 years, which I do not believe the statistics or anything that they try to tell us. But anyway, the fact that the velocity of money and the job participation rate rolled over in conjunction with the 2000 top confirms that the economy peaked in 2000. So let's push the labeling of the bear market, bull market aside. The economy peaked in 2000. And it should be obvious to all that what the Fed has tried to do since the 2000 top, and certainly since the decline into the 2002 four-year cycle low, has been to spray the ether in the carburetor and get the economy going again. And if you look at this velocity of money chart in the job participation rate chart, what you see is that looking at that 2002, 3, 4, 5 period is that there was a slight uptick. They got a little bit, they turned it up just a little bit. But what they did is they camouflaged things, and they created the housing bubble and the commodity bubble and the stock market bubble that they pushed and extended that four-year cycle to a new high. And then, I said all along, because of the underlying circumstances, it was only making matters worse. And it did, resulted in the worst financial crisis since the Great Depression. And, you just don't stretch a cycle like that and not get the tremendous snapback. And there were some other underlying factors. But anyway, we got that decline. And like I said, the efforts, they did appear during that period with an uptick in velocity of money, the uptick in job participation rate, and in other asset classes. Well, this time, while they've extended the stock market four-year cycle advance even further, and it pushed it to a new high again. This time, it hasn't appeared, the asset appreciation has not appeared in commodities. It has not appeared in housing. Yes, housing's recovered some, but name virtually any other asset. Look at gold. Look at everything. Nothing has gone up this time but stocks. And if you look at this velocity of money chart and you look at the job participation rate chart, they've just collapsed. They got nothing out of it this time. Nothing. And so, in that respect, they've got less bang for their buck, but at the same time, they have managed to camouflage the underlying problem with the stock market at a new high. And so that has people somewhat lulled to sleep. Complacency is high. But I am convinced, based on these factors and the fact that when you look at the volume characteristics and so on and so forth, that we are in fact operating within the context of a secular bear market, and that it is a mirage, and we're on the brink. I think it's trying right now to set up, and the statistics tell me that when it comes unraveled, like I said, that we go below the 09 low. Now, does that happen? Is the statistic fulfilled this time? I don't know. That's just what the statistic says. But I'll say this. If I'm right about the secular bear market, and looking back at every secular period since the inception of the Dow Jones Industrial Averages in 1896, it is a fact that every 4-year cycle decline has moved below the previous 4-year cycle low in those secular periods. And so if I'm right about that, that we're in a secular bear market period, then, the statistic should be fulfilled. Will it? I don't know. But that's the risk to the market. And with things now getting a little, shaky, I just think that people need to take heed. I feel like it's on edge.
We'll have more with Tim Cyclesman Wood right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, with this scenario that you've set up in the stock market, what's going to happen to the price of gold in the near future?
Well, in the near future, gold is pushing into, there's an intermediate term cycle low just ahead. And of course, once you get that intermediate term cycle low, it's going to bounce. But longer term, there is it should be a continuation of the decline into the 9-year cycle low. Back in 2008 and into 9, everything went down together. And I think by and large, that's what we're going to see this time as well. I think the best place to be is out of the market, out of the way. It's kind of like I can't remember who it was. I think it was Jim Rogers said, "Sell everything, run for your life," and I'm kind of echoing that right now. I like that line. It's like I said, when the I's are dotted and the T's are crossed, and we're in the setup. We're in the setup, and when it happens, it's just going to, I think, be brutal. And I think the things that we're seeing now with Greece and Puerto Rico, I know that there was some sort of deal struck. Doesn't matter. That's neither here nor there. I mean, did it really fix anything? No, it did not. And so these things are just the tips of the iceberg. The things we're seeing in the U.S. with the political and social unrest is just the tip of the iceberg. I have never been more concerned about the consequences of a 4-year cycle decline ever. Back in 2007, when that top finally set up, it was just a top. It was just a stock market top. But this time, I think it's much, much more. I think it's global, and I think that in light of the, like I said, the political and social environment and social mood in this country, just period, that it could be quite interesting to watch, to say the least.
Yes, that old Chinese saying, "May you live in interesting times." What kind of protection yes, so people now, what can they do to protect themselves?
Well, like I said, I think the sidelines and people are, they've been conditioned, and I think that's a function of the times and of greed, which is not a bad thing. I don't say that in a derogatory sense at all. I mean, greed drives us to do and prosper and to better ourselves. So I'm not saying that, like I said, in no way is that negative, but it has conditioned us nonetheless to think that we have to be invested, we have to be in something, and this is not the time to be in anything. It's kind of like mattress under the money time, I think. I think that the any upside now is very limited. In the event that there may be another, if they can kick the can down the road one more time, there might be one more gasp left, but the market's going to have to prove that to me. And until it does, I just don't like what I'm seeing and smelling here. Like I said, it's not confirmed 100%, but it's not good. It's not good. And it's really just a matter of how the setup evolves, how long it takes for it to unfold once the setup is firmly in place. Does it happen quickly, or does it just kind of linger? those are crystal ball questions that nobody knows. It's the setup itself that matters. And the market is certainly in the midst of that setup.
Tim, anything else you want to throw in today?
No, that's pretty much it. Anyone, I know that some of this stuff sounds crazy, especially with the statistics and the fact that we're in a secular bear market. I get it, but that detail is covered in the letters, or the July letters coming out this weekend. Lots of good information there with the latest on the setup and our expectations and the things to watch for, the signpost, if you will, to guide us. And then, with the subscription, there's some back issues on there too. And in the May issue, I believe it was, I laid this bear market scenario out. And let me add something to just kind of validate this that scenario, if you will. Everybody is familiar with the 66 to 74 bear market period. Everybody knows that was a bear market. But what everybody doesn't know is that during one of those 4-year cycle advances, the rallies between the phases of the bear market in Dow theory terms, if you will, the industrials actually moved to a new high. And so the concept of a market moving to a new high within a secular bear market period is, it's real. It can happen. This time it's been so extended by the outright manipulation, let's call it what it is, or efforts to extend this thing and to try to reignite the economy to get things going, that it's lulled people to sleep, and now they're not thinking, they don't see it for what it is, and I get that. But yes, a market can move to a new high within a secular bear market period, absolutely. And the other thing is, I know that the statistic sounds crazy, but let me ask you this: does it sound any crazier than when? And I'm on record with this. I made the call on the air with another a host, but back in 2008, when everybody was so bullish and saying that oil was going to $200 a barrel and all this, I made the call right at the top, based on the DNA markers and the setup. It said that oil had peaked and that it was going lower, and then it just collapsed. Made the call with housing, made the call with 2007 and 2000, and it sounded crazy then. Crazy, the calls. And to say what I'm saying now, I get it. But what I'm saying is that those methods that I used then are telling me the same thing about this setup that that I got, that the data was telling me then. And so I just hope people are listening, because the downdraft from this, once it gets going, is going to be brutal, I think. And like I said, the research is covered in the research letters. I don't call it a newsletter because it's far beyond that. It's a research letter. And so I just encourage people, if you have an exposure to the market, or even if you doubt me, take a look at it. And I think it'll change your mind.
Tim, thanks a lot for chatting with us.
Thank you, Jim.
And have a happy July 4th.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.